What's up guys, welcome back to my channel. It's only been the first 2 weeks of January and I've made over 140% on my brokerage account. And you can see I made the majority of my gains in the first week of January and then it kind of leveled off. And I'm going to give you guys my market analysis in this video, so watch this video all the way through. If you guys are new to this channel, I'm documenting my entire journey of taking $1,000 to over $100,000 in 2026, trading only SPY and SPY options. So go ahead and subscribe and let's get right to it. So I rolled my S&P 500 contracts, my 700 calls to the end of January. You can see my average price is 2.74. I am down 14%. And you can see that we ended the week with a doji candle. So we barely even went anywhere, right? But the interesting part is we are holding above all these moving averages. The 9 EMA, which is the yellow. We are holding above the 20, which is this purple here. The 50, the 100, the 200. So until price tells me that we're breaking below the 9 EMA, we're about to break below the 20, it's only right to remain long. However, you can see that since October of last year in 2025, we've barely gone anywhere. And I think this is kind of characteristic of a wave 4 pattern if you count this entire up move from last year in April as a impulse move higher. And we're getting a wave 4 consolidation into a wave 5 that should last into the April of this year. So on the weekly time frame, you can see that nothing broke down yet. We're still holding above the 9 EMA. Everything is positioned bullishly. So in my view, I think it would be foolish to assume that the market is going to crash here. And it's foolish to assume that the market is going to just fall hard and short the market because everything is holding up so far. We've only had an indecision candle today. Then I think it should be resolved in the next 2 weeks. You can see that for the triple Qs, which is the NASDAQ index, it's pretty much the same thing. You can see that we got an impulse move higher, and the entire move from October is pretty much a wave 4 chop. You can see that we're holding above the 20 weekly moving average. We're holding above the 9 exponential moving average. So even though we got a doji candle for both the S&P 500 and the triple Qs, we are still holding above all these key moving averages. So a lot of people are talking about, let's short the market, the market's going to crash. But nothing is telling me that the market is crashing until we start to close on a weekly basis below all these moving averages, starting with a 9, then a 20, then it's only right to remain long, but cautiously long. And you can see that for the S&P 500, there are two kind of views on the daily time frame. That is sparking a lot of debate online. You can see that for one view, S&P 500 is forming an ascending, kind of ascending wedge. You can see here with a flat top, and then the price is making higher lows on the way up, which usually results in a bullish, explosive move to the upside after this consolidation is done. The other view is that we are forming an ending diagonal, which is going to be bearish after this triangle completes. But the problem is I don't see any negative divergences on the daily time frame for the MACD or the RSI indicator. So if this is truly going to be an ending diagonal, then we should be seeing negative divergences everywhere. Starting with the MACD lower highs on the MACD, lower highs on the RSI, but higher highs on the price action. But I'm not seeing anything like that so far. So I'm not going to rule this out, but I'm saying that it's less likely, in my view, that it's going to be an ending diagonal resulting to the downside. Could we get a fake out move to the downside first to around 681 before moving higher to 710 or above to 720? That's entirely possible. That's why, like I mentioned, I'm keeping my position light just in case we decide to tag any of these moving averages like 681 or 672 before resolving higher, right? If we bounce above 688 and then push above, that's the best case scenario. But in 2026, what you want to do is capital preservation. You don't want to give any of these gains back in order to reach our goal of $100,000 by the end of this year. So what you want to do is capital preservation, keep your positions light, and if the market does decide to pull back, then it's only right to be long, right? But however, if we close below any of these weekly averages, then it's time to reconsider our bullish stance. However, we don't see anything like that so far. We only ended with a doji weekly candle on the S&P 500 without breaking down any of these moving averages. So again, it's only right to remain long. Now, the S&P 500 4-hour time frame, we closed below the 50, and then all these moving averages, the shorter term like the 20 and the 9 is pointing down. So that's why I'm a little bit cautiously optimistic. You can see that the MACD is negative here, that we could get a pullback into Tuesday, into Wednesday. Wednesday, Netflix reports, oh sorry, Tuesday, Netflix reports earnings, which is going to be realized Wednesday morning. So we'll see how everything plays out, but you can see that shorter term, we could be at risk for a pullback to either 689 or 686 in the near term, unless, futures gap up. So we'll have to see. And on the VIX, you can see that we're below all these higher moving averages, like the 200, like the 50. However, we are forming a weekly divergence, a bullish divergence for the VIX. So that's something to keep in mind. However, you can see that it's struggling to gain traction above these moving averages, struggling to hold. So that is a good sign for the bulls, and VIX is sitting at simply 15. So again, a lot of favor, a lot of points towards the bulls, looking for higher price targets. Now, keep in mind the biggest news next week would be Netflix earnings. All eyes on Netflix. However, so far the banks have been pretty good. Morgan Stanley, Goldman Sachs, JP Morgan, they've all reported, better than expected earnings. And then TSM, which is a big one that resulted in a market rally on Thursday. People talking about getting back into the AI trade because TSM, Taiwan Semi reported better than expected early earnings for the chips. So a lot of chip stocks rallied. So, earnings are looking good so far. Netflix is going to be the one to watch on Tuesday. And like I mentioned, it's only right to remain long until any of these moving averages break down. So hope this helps you with your S&P 500 analysis. I'm going to be making updates to my trades more frequently. So go ahead and hit that subscribe button if you haven't already. And I will see you guys in the next update. Peace.